Gucci is having a really tough time right now, and it needs to get things together quickly to stay relevant. At least that's what the data shows. But it won't be easy, because the downward trend has been apparent for a while now. According to a recent Bloomberg article, Kering, which is the company that owns Gucci, needs to turn things around drastically. And the company said it's likely to bring in up to 45% less money in the first half of this year compared to the same time last year. This is obviously not good news for them. The company's priority is to get Gucci back on track, according to the chairman and CEO. He said recently in a call to investors that they are in a pivotal moment in our journey. More data shows that sales at Gucci fell 18% on a comparable basis, which means the company sold less merchandise than the same period a year ago. But why is this happening? What or who is to blame? And what does it mean for you? Let's dig into it using research, analysis, and data. Gucci is owned by Kering, a massive company which also owns brands like Balenciaga, Alexander McQueen, Yves Saint Laurent, and so many others. Kering's chairman and CEO said in a recent call that the company's performance has worsened considerably from January to the end of March of this year. The downtick is unique to Gucci and Kering because other luxury fashion houses like LVMH and Hermes have stayed resilient, so it's only really Gucci that's hurting. Let's get into why this happened before we get into what it means. When it comes to Gucci's customers, there are two main categories: the wealthy, who use the brand to walk red carpets and saw Gucci pieces as investments, and the second group were the aspirational shoppers, those who were middle or upper class and viewed owning Gucci as a status symbol. This isn't necessarily true for every type of luxury brand. For example, Birkin bags are so expensive that they attract a more limited aspirational crowd. So what happened to both of these groups? Before I answer that question, let me quickly introduce myself if you've made it this far. This channel is for those of you who care about why and how you spend your money on fashion and beauty. Beauty and fashion is being sold to us everywhere, whether we realize it or not. Consider the Devil Wears data as your seat inside the boardrooms where decisions are being made about how things are sold to you. You don't have to have a background in finance or business or fashion to be here. I'm making this channel for anyone who wants to make smarter decisions about what they buy. I'm a journalist who has spent years covering financial markets on Wall Street, helping investors make investment decisions with the stories I wrote for some of the biggest media brands in the world. And now I run this channel. If you want to support the mission, subscribe and find me on these other platforms to join the community. Okay, back to Gucci. Let's talk first about the decline of aspirational shoppers. Did you know that over 20,000 songs have mentioned Gucci? Though Gucci is mentioned in a lot of different genres, from rock to pop, it's most notably heard about in hip-hop music. The man responsible for influencing hip-hop's fascination with high fashion is Daniel Day, also known as Dapper Dan. In the 1980s in Harlem, New York, he used Gucci logos to sell knockoff merchandise at a lower cost. The illegal use of logos in his custom-made designs led to counterfeit lawsuits, but it did help introduce a whole new and diverse audience to the Gucci brand.
Gucci bandana, Gucci bandana, ay, Gucci bandana, Gucci bandana, ay.
It helped the brand become something people aspired to buy if only they got rich enough to afford it. This is called the aspirational brand, something that people want to buy and be associated with because of its perceived prestige or because it's a status symbol. And it's not necessarily because people who aspire to buy brands are shallow or vain. A lot of times, carrying status symbols like expensive bags, shoes, belts, or even bigger items like cars comes with a certain level of respect and acceptance from other people in society. This is why Gucci became a brand that people aspired to buy, believing it would also buy them acceptance into a part of society they previously felt excluded from. But people across the US and Europe have been buying fewer luxury items because of recent economic pressures and inflation. Inflation refers to the rising cost of things. You've probably noticed it in your own life, like groceries, gas, drinks when you go out. Everything is just more expensive. Now, the luxury sector is usually considered recession-proof. This is because wealthy people are less affected by recessions and can afford to keep spending on fancy items. But that was the problem with Gucci. It wasn't just a brand that the rich were buying. It was deeply aspirational, meaning it was what lower and middle-class people wanted to buy. But that changed. They stopped aspiring to buy it. Let's discuss why. Gucci is one of the most counterfeited luxury brands, with 13.6 million posts on TikTok, leading people to fake Gucci products.
Everybody's gonna think I'm poor. I mean, I am, but I don't want anyone to think it.
There are pros and cons to counterfeits. While it can increase brand awareness and act as a form of marketing, it also devalues the brand in the eyes of wealthy shoppers and those who may aspire to own a real Gucci one day.
Fake Gucci bucket hat from DHgate just came in the mail, so I'm gonna unpackage it for you and talk about the quality. Okay. First of all, the tag says Gucci, made in Italy. It has like even one of these like really nice little fancy breaker things. Nice tag. Stitching looks a little, there's like a couple of like loose threads there on the tag, but overall, yeah, it seems to be really nice in that department. What does the tag say on the inside? Nothing. I don't know if regular Gucci tags do usually have any other content in there. This does not.
Gucci invests significant resources to combating counterfeits, but clearly they're still out there. So that's why aspirational shoppers have stopped buying Gucci, due to economic factors and the counterfeits. But why did the wealthy stop? Apart from the counterfeit issue, the wealthy have their own reasons to stop shopping at Gucci. Let's explore that decline of the second group of people. 35% of Kering sales hail from Asia, excluding Japan, but shoppers in China have scaled back on buying Gucci's iconic belts and handbags and going instead for brands like Hermes and Prada for their more muted looks. Both Prada and Hermes posted strong sales results last year, unlike Gucci. Sentiment also arose with the trend of quiet luxury, a trend that came about in 2023. Quiet luxury is about subtlety and minimalism instead of loud, flashy displays of wealth and fashion, especially those that Gucci is familiar with. But unlike other viral fashion trends that come and go, quiet luxury saw sizable returns in investors' portfolios. Let's talk about that for a second because it's important. Investors at large financial institutions usually see luxury stocks as something that's a good bet against inflation. This is because the rich continue to buy luxury even if the poor can't afford it anymore. And recently, the luxury brands that have been bringing in great returns for these financial institutions are quiet luxury brands like Hermes and Prada-owned Miu Miu and Swatch Group and others. That's according to bank DBS. And this was reported recently by CNBC. They said that quiet luxury was bumped up in investors' portfolios last year, pushing down brands that were considered too loud. As a result, Gucci and Burberry were pushed lower in global rankings of luxury stocks, according to Bank of America Securities Research. Ashley Wallace, who's a research analyst at Bank of America, said that quiet luxury brands are better positioned in 2024 than loud luxury brands. Now let's get into what Gucci is planning to do about losing its two customer segments, both the wealthy and aspirational shoppers. First, the company is changing up leadership. Most recently, the company added a communications executive into the newly formed role of deputy CEO. Last year, Kering appointed a new creative director and replaced the former CEO. This is a common move for companies. They replace leadership when things aren't going well for multiple reasons. One is to bring in a fresh perspective and new ideas. Another is due to investor pressure. Investors and board of directors demand a leadership change as a condition for continued funding into a company. Along with new leadership, you may notice more Gucci ads and partnerships. Like Ryan Gosling on the red carpet, and tennis star Sinner carried a custom Gucci duffel bag on his shoulder, marking the first time a designer bag has been carried onto center court in history of Wimbledon championships. There are also an abundance of ads on Instagram that are very explicit, asking for your attention and your follow. Gucci's also been playing up their real-life experiences. Look at this installation in Chengdu, China, which is a hub for global fashion. Here, listen to Kering's chief financial officer explain their own strategy in a call recently with investors.
We are developing sales with quality in line with the strategy of desirability and exclusivity. Regarding so this also goes with the fact that we are balancing the effort between the different segments of clientele, making sure that we are attractive to the more aspirational customer, fashion-driven customer, but also that we are very attractive to the high-end customer. And we are making some progress with the high-end customer, and that is very encouraging.
So what does this all mean for you other than seeing more Gucci ads in places? Well, that depends on whether you invest in Gucci's parent company, Kering. Kering is 42% owned by a company that's controlled by the Pinault family. The rest of the share capital is held by institutional, individual, and employee shareholders. If you are an individual investor, then over the past year, you'll have seen the stock price decline. A common cliche among investors is to buy the dip, which means buying a stock once it has fallen in value. But this has its benefits, and it also has its risks. Sure, the stock price can go up, but it can also fall further. You might bet that Gucci will once again succeed, because it's been able to pull itself out of crisis before, like in the early 90s after a restructuring and a difficult retail market, but Gucci came back from that, and if it can pull that off, then maybe the stock price will go up. But this isn't the 90s anymore, so you might bet that it won't be able to pick itself back up. After all, we're in an age of fast fashion trends and an age where people are less brand loyal. There's an ongoing economic crisis where people aren't able to afford necessities and homes, and many people treat fashion less like an investment and more as a fleeting expression of their selves that changes daily. So this isn't financial advice, but I leave it to you. Would you invest in Gucci right now if you had the money? Do you think Gucci will be able to pull itself out of a loss? I'd love to hear, so let me know in the comments or on Reddit or any of these other places you can find the Devil Wears Data. I'll see you again real soon.